Right, the lock-in, sure.
They're holding on to
No,
the
I'm just
interest
talking about
rate.
buyers that haven't bought a house, that are first-time buyers.
Yeah, but you better buy now because.
Well, that's what I'm trying. That's my point. That's why I'm urging him right now, like, because he's, a lot of buyers are like, oh, the rates are too high, and this is this one guy we're working with.
I would
His
just
complaint
like
is that today's is too right. So I'm like, hey, bro.
Yeah,
I get it,
the
but
rates are just say like
just a thought. Boom, I hit
you
it.
can we're anticipating rates to go down in the next year or two. You can refinance. Your loan is eligible for a refinance within 6 months after you close the transaction. And so our plan is to refinance you once your loan officer will be monitoring your rates, and once they go down, we can refinance.
We need to make that a point on today's show. Like I think not enough. That message is not out there enough.
Yeah, that's a big message.
That because there's a ton of buyers right now. Like, I'm gonna just hold off. Rates are too high. I'm not gonna buy at 7.
Okay, well then
I
wait
gotcha.
wait until they go back to
And
6.
then when they go down, everybody and their mama's gonna flood the market.
Wait until they go back down to 3. You'll be dead.
And it's gonna be like 2020.
It will never happen.
We just saw that.
You'll never see rates at 3 again, ever again.
And
Not in our lifetime. Never.
But even if we did, right? What's going to happen? 2020, 21.
Okay, let's just say
They can't compete in that market.
Then now you got 1,000 buyers per house.
Yeah, it's all on.
You got 1,000 buyers
Right.
per house, and the home prices are going to go up again.
That's
You're lucky to get a house.
Double check that video, man. Does that background look a little off? Does your side look a little, even on the video?
It looks good to me. Yeah. Yeah, video. I mean, as far as I can see, it looks good. What do you mean?
Yeah, your side doesn't look a little bit higher, or we're good?
I mean, it looks good to me.
Okay.
I mean, did it look off to you?
Yeah.
No, it looks, from this angle, it looks good. Like even,
But you gotta look at it like straight, not from way up there, like right in front of the camera.
The sign looks good, bro.
In front of the camera?
In the camera, I just looked at
Okay.
Yes.
All right.
I'm looking at the camera screen. It looks straight to me.
Okay.
I'm definitely not drunk like Omar or like we had Gary.
Oh yeah, that
Trump
thing was
sign.
sideways.
No, Sid, you're 100% right, man. Like you're saying, like, there's a lot of buyers.
I'm not 100% right because
Well,
I can't predict the future.
Yeah, there you
but
go.
I mean, a good estimate or a good
Yeah.
opinion, I guess.
Definitely. No, guys.
Educated opinion.
Yeah. Let me go live right now on Facebook because that's the type of time everyone needs to hear.
Do the
this message.
22nd. Oh, I'm definitely gonna hit this appraiser up.
What do you mean? No, we don't got time for that.
No, not right now.
Nobody has no. We don't have time to wait, bro.
This
He's
appraiser's
playing.
asking for 9 days.
No,
That's crazy.
9 days.
Thank you, but no.
9 days in this market?
Thank you.
I'm gonna tell him right now.
Go live.
days?
Tell him, I know you ain't got nothing going on, man. You can give me
9
9 days.
He's
9
on vacation.
days.
He's going
Yeah,
on
you're.
vacation.
I'm
somebody
gonna
else.
pull it. Yeah, I'm gonna pull it. Sign me a new one. 9 days. You got Jim calling me after 2 days. I can't wait 9 days for.
Plus a weekend, so he's
Oh,
like
man.
9. He's like 9
Yeah, you just turn the whole camera.
He's like 9 business days, not counting weekends. So that's like
Yeah.
add 4 more days of that.
Mm-hmm.
9, 10, 11, 13 days.
Well, I'm gonna need you help.
And that's to go out there, not to get the report.
Yeah, to go out
To
there.
get out there. And then the door's locked. And then there's no smoke detector. So you got to go back.
I know I messed up a little bit, but
Yep. The inspection fee.
And another 2 weeks to go back.
So we are live on Facebook.
Oh, we are. Right, like this minute, right now?
Like for real.
Like when?
Like literally. Like they're looking at you right now.
Starting now. Okay.
The whole world's watching.
Okay, cool.
No, but what you were saying was we were talking about buyers in this market right now. So real, like and I understand if it's not your time, it's not your time, and it's always about if you're financially in a position, if you do really have a need to move and things like that. However, to the buyers that are just would like to move, but the only concern right now is the interest rate is higher, is not necessarily the best point. And this is like we were just mentioning, because we all know, right, like this, buying today, prices are still increasing, right, because of the low supply of houses on the market. So now, if you look at it like, well, if I buy the house today at today's prices, of course we're going to have an elevated rate. It is what it is. However, by this time next year, when rates do come down, you could refinance, right? But at least you have the house at today's prices, because as we've seen prices over year, even right now, have still consistently gone up in year over year. Another thing to those that are thinking of waiting till next year when rates dip, we saw what happened in 2020. We saw what happened in 21. We saw what happened early 22. The interest rates were all-time lows. What happens is it brought out all types of competition. It unlocked a flood of buyers. Now everybody's fighting over one house. And what do we see? Prices are just going up and up and up. Now the house is a lot more expensive. The rate at that next year may be a little lower, but is it going to offset each other, right? Because the price you're going to pay next year, as of now, right, we can't predict the future. We don't know what's something crazy. But as of now, prices next year will be higher. And so it may not be the best bet to wait till next year to pay a higher rate, and you're competing with more buyers, so it's a good chance the house you really want, you may get outbid. It's a good because you're going to have more competition when the rate goes down. Just a thought.
Yeah. I mean, when you were talking, I think about like, is it a good time for me to buy, and can I afford to buy today? Mm-hmm. That's kind of like what I was thinking about when you were talking, Rich. Is like, is it a good time to buy for me, and can I afford to buy today? Because obviously we don't want to put somebody into a home that can't afford, right? The bank won't let you anyways. We know that. So, I mean, but still, you don't want to stretch yourself because you have to really think about your priorities. Not everybody is meant to be a homeowner today or even ever, right? But for people that want to be a homeowner and they can afford to be a homeowner, is it a good time to buy today? I say, yeah, I think that's actually a really, really good time to buy today because your competition level is a lot smaller than it's going to be when the rate, like you were saying, when the rates go down, right? Mm-hmm. I mean, even right now with the rates that are bigger or higher than what we've seen in the past, we're still getting multiple offers, right? Yeah. I mean, how many homes have you seen pop on the MLS? And you call the agent and there's 10 offers already. And you're like, wait a minute, what's going on here? The rates are 7-8% and there's 10 offers on this house. Yeah. What's going wrong here? What is going on here that's not supposed to be the way it's supposed to be? Talking about the buyer, what should I do? They're coming to you, the real estate professional, right? Mm-hmm, You're the real estate professional, yes or no, right? Mm-hmm. Yeah. I am the real estate professional. I've got experience. I've got knowledge. I've got this. I got the broker. And so they go to you. Because if they go to their mom and dad or their uncle that's unemployed, what are they going to tell them?
Don't buy. It's not a good time. It's
never
a good time.
Well, right? because they're drawing back from a traditional regular market. Right. Like, you know what, the rates are going to go down. Sellers are going to be hurting for buyers because there's too many homes for sale, not enough buyers. But that's the old mindset. It's a different world. We talked about the interest rates being historically low because of COVID. Right. Okay, the Federal Reserve dropped the rates to stimulate the economy. And so we've seen, I mean, the lowest rate I got, a VA buyer was 2.25% fixed for 30 years. They should never refinance. Why? Ever. It's free money, free money. 2.25 cents on every dollar you have to pay me back. So I lend you $1, you pay me back 2 cents and a quarter. Why would I ever refinance or sell that property? Mm-hmm. So we have a lack of inventory. We don't have enough people wanting to sell. So therefore we don't have enough homes. And even with increased interest rates, we still have too many buyers. So getting back to you, I was watching a video. Barbara Corcoran was talking on a video podcast, and she said everything that I wanted to say. She said when interest rates go down, there's going to be more buyers coming into the market. More buyers, all it's going to do is increase the price of home sales. Right, competition. And so you're going to pay more for the house that you want to buy today, and you're going to have a harder time getting that house. Right. So 100%. Why not be strategic about it and I'll pay the so-called higher rate with the anticipation. Of course, there's no guarantee, but with the anticipation that rates will go down in 1, 2, 3 years, we just don't know. But at least you're locked into the home. You're not, there's this great little quote that says you're paying 100% interest on rent, right? So why not pay like 7% interest on rent on a mortgage, right? And you can always pay that mortgage off early if you want. But I think that this is a opportunistic moment. It's just that people, I think people need to be, consumers need to be educated by somebody on the strategic plan they need to take, because most people, they don't know. I mean, most people, you got to remember that our borrowers and buyers, they work for the county of Fresno. The wife works for the county of Fresno at CPS, and the husband works at Caltrans. He's all day, slamming a sledgehammer on the sidewalk. They come to you for the help. They don't know.
They don't know. And this message really needs to be out there, like, for especially to a lot of buyers that we're all, saying, oh, I'm going to wait till next year. Again, may or may not be the best deal. Again, right now, the fall, historically, this is the slow season, but we're going to get into that later because this year is kind of different, right? I think it's going to reverse, and there's a reason why. But typically this time of year is when you could take advantage of a better deal, right? You can negotiate a little bit more with sellers. You can probably get the house you want a little bit under the price, maybe get the seller to add some closing costs. However, but to your point, the prices of today, right? When there's not a bunch of competition as it would be when we go down to 6%, 5%, even 4% interest rate, take advantage of right now of getting the good price for your house. You're going to pay more, but again, there's a great opportunity potentially next year. Rates are going to have to come down at some point. That's a fact. But we just don't know when. So that's the question of when it's going to happen. It's going to happen. We just don't know how long it's going to take. But when it happens, you could possibly take advantage of a refi. But you got today's prices, and just to your point, next year, when the rates dip, it's just going to bring out a lot of buyers, and the price is just going to be crazy. It's going to drive the prices up.
I think so.
We have low inventory. That's it. Historically low houses.
And the Federal Reserve, remember at the beginning of 2023, they were hiking the rate 1%, 1.5%. They went down. I think they went down from 1.5% to 1% every time they met. The Federal Reserve 1.5% hike, 1% hike, 0.5% hike, 0.25% hike. So that historically is telling us that they're going down, and so they wouldn't drop the rate down unless they knew that they've seen that the inflation is going down. So that's a good indication for us to say, okay, I think like sometime next year we're going to see rates start going down. Okay, but I think that if you look at you're buying a house and just to sell it within a year, then you might not want to buy.
No.
Okay, but most people are holding on to the homes for probably 10 years or more. It just depends on what you are, what your plan is. But if I buy a house at 20% interest rate today, let's just say my loan officer gives me a 20% interest rate, just thinking, and I'm going to hold on it for 30 years, I think that the equity buildup will still be good for me. Mm-hmm. I'll still make money even at 20%. So if you're holding on to the home for a long time, I wouldn't worry about the rate so much. Yeah. Okay.
And a great quote I heard from a super successful investor: it's all about time in the market as opposed to timing the market.
Yep.
Right? Think about that. It's not about timing the market, because everyone's trying to time it. Like, I got to buy at the right time. You're never going to find the perfect time. I don't believe there's a way to find the perfect time to buy. But now, if you come to if you approach it with time in the market as, well, I'm just going to keep this property 8-10 years, you're much more guaranteed of getting the appreciation and benefiting off of long-term appreciation and all the benefits that real estate can offer over time. But so I think that's very valuable. It's not, if you're looking for a quick flip or something like that, you got to be super cautious, and definitely. But
look, the flippers know what they're doing. I have several. I have several flippers in my office. I'm a real estate broker, so I have several agents that, like, probably 90% of their job is flipping. Yeah, that's all they do. So they've been flipping for 20 years, and they're still flipping. They flip in any market. Right. It doesn't matter, because they do their numbers and they flip.
It's a numbers game.
Yeah, for them it's a numbers game, and they're making money. It's like, what? How are they closing all these deals? They're just doing their numbers.
You got to buy it. Yeah.
They might not be making $200,000 on a flip. They might be making $50,000 on a flip. But hey, $50,000.
Dude, that's most people's year salary. What do you mean, $50,000? You know what I mean? But honestly, that's That's not a bad. Yeah. So
Yeah.
it's. Oh, before we go on, we got Sid Delatorre, guys. Allstate Homes broker.
For the second time. For the second time.
We had to have him back, guys. Coming back again for part 2. What's going on, Mark? How you guys doing today?
Market is a little bit different now, so I'm glad Sid is back for this second time.
Yes.
To talk about a little bit more of what we're already talking about.
Yeah.
You know, and running those numbers, not just as flippers, but as homeowners too. And I think that's what a lot of people lose sight of. You know, if you're paying a 7.5% these days compared to, just do the math. I mean, you just get a calculator out or talk to your loan officer, do the math. What would my payment be, Mr. Loan Officer, Mrs. Loan Officer, if it was a 6%? Because that's what I want to wait for. I want to wait till it hits 6%.
Right.
Well, you'd be saving $150 a month. Okay. So if you bought today, $150 more a month. For 12 months, that's $1,800 a year. Let's just say the rates don't drop for 5 years. Nobody thinks so, but let's just say 5 years. We're talking about $9,000 in additional payments. Right. You think your home's going to be worth more than $9,000 5 years from now?
That's a great way to look at it.
Numbers make sense. You don't even have to go that far. You don't have to deep dive. I just did all that in my head. You don't have to deep dive. Rates don't mean anything. If you're ready to buy and you're able to buy, do it. This investment is crazy.
And that's why I think this podcast and things like this type of messaging just needs to be out more. This is not put out as much, like, just like you were saying, just the knowledge, just knowing about how it works is really not put out as much to the masses for them to understand it, right? They just hear what their uncle or in-law says, and
or the media,
a lot of
the media too. The media
is huge. And honestly, guys, the media is about 3 months late as far as news, right? They go off of the Case-Shiller report a lot of times, and we all know. Well, real estate professionals should know Case-Shiller is usually about 2.5, 3 months later, old data, right? So they're reporting on the market maybe 2-3 months ago, even though right currently we're in a whole different environment. So just FYI, and those who like numbers and want to geek out on that, go check out Altos Research. That's a great source. They are day by day, so you can find real time data on what the market is doing today. What where we are, what the inventory is looking like. Median price. Just just what's going on.
Yeah, I like to train my real estate agents to go on the Fresno MLS. Because I think real estate is very regional, but what I mean by that is what's happening in the Bay Area, what's happening in LA is different. It could be different than what's happening in Fresno, right?
Right. 100%. Every
and even in Fresno, what's happening in the Fig Garden, the Bluffs, and Southeast and Northeast Fresno and is different. Amazon came to Southeast Fresno. What's happening around that area? Is appreciation higher percentage-wise than it is in North Fresno? It could be. So that's why I say real estate is very regional, and that's why you take the stats with a grain of salt. Talk to the professional, the guy or the girl that's on the MLS every day, looking at how many homes sold in the 93722 or 10 zip code. Yeah. That's the person you need to talk to. When you ask them how many homes are for sale in 93710 currently, and they say 72 homes are for sale. That's too many, right?
Yeah.
But I'm saying, let's just say 20 homes.
Right.
And then you ask them, what's the median price range of those 20 homes? 308,000. Right. Okay. How many homes are pending? 12. How many homes sold today? 6. That's the information you want. You see that? It's very regional. Mm-hmm. I don't care what's happening in North Oakland or South Central or Newport. I'm not buying or selling there. Exactly. I need to know what's happening right in my backyard.
Right.
Mm-hmm. The real estate agent knows what's happening. The one that's on there every single day, knowing that. And the thing about Fresno is that we're seeing a shift in Fresno. Fresno used to be affordable. Okay, but it's becoming a big city now. Okay, you have to understand that. Jerry Dyer, the city council, just approved the building of 50,000 homes in Southeast Fresno. 50,000 homes.
I saw that. Yeah.
It's 45,000, but I'm rounding it off to 50, right? Well, I might as well round off to 50, but it's 45,000 homes. Just got approved. Fresno's growing. People from the big cities are coming down. Fresno used to be a $225,000 average price range. You used to be able to get a nice house.
And not long ago. We're talking 5 to 8 years. You know what I mean?
Yeah.
Like it wasn't
A home,
It wasn't that
a
long.
nice home. You can't get a home in Fresno for $225. You can. It's gonna be tore up from the floor up. You know what I mean? It's gonna be so. The mentality has to shift from the agents and the consumers, the buyers, to saying it's no longer like that anymore.
Right.
And we better jump into the market before it gets worse, because someday we'll be seeing $1 million homes in Fresno. Well, we've already seen those.
Yeah.
I mean, $1 million homes used to be a rarity in Fresno. Now it's commonplace.
Right.
Right.
There's some new builds that are $1 million.
Yeah, I mean, you're looking at 3,000 square foot homes, 3,500 square foot homes selling for $800-900 million, right, in Fresno. It blows my mind because I'm older, old school person, but the new agent coming in is like it's common for them. It's normal, just it's normalcy for them, saying, "Oh yeah, that's normal."
Yeah.
Well, no, you don't understand. Not for us, but Fresno has changed. You need to get, someday we're going to be, maybe not like LA, but someday we're going to have higher prices than you've ever imagined. And so those rates, getting into the house, the average price range, according to Fresno Association of Realtors, of course, that's what I go by, is $425,000 right now. What used to be last year was $385,000.
Yeah.
Now it's $425,000. How do I know that? Because I'm on the MLS. I'm talking to agents.
And just really quick to your point, that's a great point you brought up, guys. So keep in mind, here in Fresno, we are up year on year in prices because there's a lot of talk out there, and those that are doomers like, oh yeah, prices are going down, they're going down. At least in Fresno, as of now, they're still going up on the upcline. So,
but the good thing, though, this is the good news. Let's talk about good news. Okay, so Sid, you say the home prices are $425,000. What's the payment on that? Okay, so I'm gonna get ready to shock you here, right?
well, yeah, it's
well, not
elevated.
shock you, but I'm just saying the payment might surprise you a little bit. But that's when you need to get with a mortgage professional. The real estate professional will refer you to their expert mortgage loan officer, and that mortgage professional, there's all these strategies I guess you can use, like there's a 3-2-1 buy down. Did you know that you can actually pay a little extra to the bank to bring that rate from 7 to 6? Okay, 6.5. 6.25. Did you know that you can ask the loan officer to do borrower paid and give you the wholesale rate? Okay, and then your closing costs will increase. Well, I'll actually let Mark talk a little bit about that since he's actually the loan officer. Can you tell us?
Yeah, you got a good program going on right now.
Tell
right?
us maybe some strategies about that.
And that program that just came out with helping the down payment assist, grant.
Yeah.
The grant.
So when you're looking at that purchase and the structure, and it comes down to structuring that loan. Every family is a little bit different. So some of them may have more than enough funds to close. So they're not worried about that, but they're worried about the payment. So how do we bring the payment down? Kind of like what Sid was talking about. You can do a 3-2-1 buy down or a 2-1 buy down where your rate is, or you make a payment as if your rate was temporarily lower. So if it were a 3-2-1 buy down, you're supposed to have a 7.5. Your first year, you're going to be making payments as if you have a 4.5.
Real quick, because there's a lot of people probably watching or will be watching. They're like, "What in the heck is a 3-2-1 buy down?" The professional industry people know, but there's a lot of people that don't know.
Right, that's what I'm saying. Yeah, so a 3-2-1 is the first year you would be making a payment as if you have a interest rate that is 3% lower than what you should be getting.
Gotcha.
That's what your payment would be. That's not what your actual loan is. You still have to qualify for that 7.5, but you would make payments lower that would temporarily provide some relief. And then the following year it would be 2% lower than what you should have had. The following year it'll be 1% lower than what you should have had. And if the rates still haven't gotten better by then, you're going to get that 7.5 when all of those temporary reductions are gone. So that's one way to lower your monthly payment. You're still going to have that rate, but it is being covered by somebody else. Like Sid was saying, there's another way. If you have assets, if you have some extra funds beyond the down payment and closing costs, you can take some of those funds and permanently buy down your interest rate. Like Sid was saying, if you're supposed to have a 7.5%, maybe they buy you down. Maybe you can spend $5,000 to buy down to a 6% interest rate. Now that 6% will be forever until you refi if you buy it down. Again, this costs a little bit more out of pocket. Doesn't necessarily have to come out of yours. It could be from the sellers. If the sellers are giving you $5,000, say, I want to take that money and use it to buy down my interest rate permanently. So then you'd go from whatever you should have gotten down to that 6%, and you'll have a 6% for as long as you decide to keep it. If you want to refi, you want to sell, then things change. So there's a lot of different ways to structure your loan to fit your needs. Because a lot of people they may not be concerned about the payment. They want to say, well, how much cheaper can I make my closing costs? I don't care about the payment. Right. We got this job and that job, and even my son, he's not going to be on the loan, but he's working already. He's 18. He's paying for that room. So the payment may not be the issue. How do I keep my closing costs lower? Well, then there's grant programs for that, so where you don't have to come to the table with as much closing costs, but you don't care about the payment. Not that you don't care about it, but the payment isn't the concern. Mm-hmm. Some people, the payment is the concern, and they're not concerned about the closing cost. So that's where you attack your monthly payment. It may cost you more on the closing cost side, but you're attacking where your concern is. So it's different for every family. There's so many programs out there to help you out. So many loan officers to help you structure it the way that fits your family. But it's just... You will never know that until you reach out to somebody. That's the crazy part. And reach out to the professional. You will never know. You will never know.
Right. And because this question always comes up, is it a good time to buy? Really, it's a good time once you'll know if it's a good time to buy if you know your own personal situation, and even after you talk to a loan officer, so they can go through everything, show you the numbers, see what you're capable of buying, what it's going to cost to put down, what the monthly payment's going to be. If all that looks good and it's doable, it's a good time for you to buy. If not, then just hold off and wait and save up and work on some things, right? So I just hate that question. It's not a general question. It's a case by case question.
Yeah, every
people generalize everything for some reason.
Every person's situation is different.
100%.
Like if you have 5 clients in one day, everybody's going to be different.
Right.
I have money for closing. I don't have money for closing.
Exactly.
I have good credit. I have not so good credit. Everybody's different, right?
Yeah. Mm-hmm. And I think the issue is we gotta put more faith in ourselves and know and going off of what we feel is the best for our own situation. Because I'm a victim of this in the past as well. We've all been there. We might give a little bit more weight on a family member or someone else, an outside entity that's saying, "Oh, it's not good," or even watching the news or watching people online. "Oh, it's a horrible time," this and that, without really knowing the facts. People could say whatever, right?
Get with the professional.
Look at your personal situation. Go over it with a loan officer or someone if you're looking to buy, and then make your own decision, because you're the only person that's going to really be able to decide that.
Yeah.
At the end of the day,
I think it's that rejection, that fear of rejection of them coming into the office and speaking to a professional. Yeah. It's a little easier to hear, you probably shouldn't buy from a family member or a friend than it is from somebody completely random who looks at all your documents and says, I can't help you. Not right now. Not right now. Right.
But it's also known
that fear of rejection is what. Yeah. But there's so many ways to prepare for that.
Yeah. But wouldn't it be horrible though if you're afraid to talk to someone to see where you are, and then later on to find out, man, now prices are through the roof and it's crazy, you definitely can't buy, and you realize like, oh shoot, last year, man, I had everything lined up and there was a good chance I could have bought.
I could have done this,
but I just was afraid to call the loan officer or like that's to me. It's like me. I believe like I'd rather know. You know what I mean? Like I think you should just. It's a mindset thing. It's like whether it's not even a no, right? Like even if you don't qualify, at least you have an idea what you need to do. I look at it that way. Like it doesn't hurt to talk to someone, a loan officer, to find out where you are. If it's not right for you, at least you're gonna know that, and you're gonna have know what to do to get to your destination, right? Like okay, my credit is a little low now, but now that I know it's this number. The loan officer told me if I just pay this off, maybe just pay this down a little bit, do this, I'll be able to qualify for this in 2 months.
Good example will be I had a client come in yesterday to the office, a borrower. He came in. He's a FedEx driver. I go, how long have you been a FedEx driver? 3 years. Check. Okay. Mm-hmm. You have a down payment. My mom has $150,000. She's going to give me. Check. Mm-hmm. How's your credit? Terrible. No check.
No check. Right.
No check. Let's run your credit. We'll be surprised. Sometimes it's worse than they say, and sometimes it's better than they say.
Yeah.
We ran the credit, 550 something credit score.
No, he's ready to shop at the Bluffs or. You know what I mean?
I said, you got two out of 3. I said, you have 4 collections that are under $1,000. I go, why don't you go pay them off?
Knock them out.
Pay them off. Give me a letter. Come back. I have good news and bad news for you. At the end of the meeting, we're like, I see, I go, what do you want first? He goes, I want the bad news. I said, you can't buy a house today. I said, you could.
That's not bad news, though.
Yeah,
that's just not right now.
Yeah, I said, you can't buy a house today. I said, what's the good news? I go, in 6 months, you probably can. I said, this is what I want you to do. And so he took off out of that office. He goes, give me the numbers of the collections people. They've been calling me anyways. I said, Dad, we could also do a thing called a rapid rescore. There's a lot of other things we can do. And I said, in 6 months, we can get you most likely into a home if you do what I tell you to do. And so, people, not every person that comes into office is going to qualify on the spot.
Right.
But are you going to need a house in 6 months? Yes or no? Are you going to be paying rent for 6 months? Yes or no? I don't know. That's up to you. Okay. But the good thing, the good thing is that you came in here today and you have a plan now, as opposed to just thinking about it, watching Netflix at home, thinking, I wonder if I would ever get a house.
Right.
Now you know.
Right.
Now I can't do anything. Now it's up to you to do what you need to do. And someday you may be a homeowner at 7.5% interest rate. Okay, that's fine. The plan is to. And when the rates go down, it could be a year or two. Let's just say next summer, the rates go from 7.5 to 5.5, 6, and we can do a buy down or whatever. And we drop your rate. We drop your payment from, $2,700 to $2,400 a month. You're good to go. That's what rents are going for in Fresno anyways.
Crazy.
Right?
Crazy.
Remember what I said, Fresno is no longer Little Fresno. Okay, that mentality has to go out the door. We are no longer we're becoming a big girl, big boy city nowadays, and so rents will be up, home prices will be up, but it's only going to get worse and worse. California is super desirable city to live in. Yeah. I mean, we had a 2-week summer, right? Probably. I mean, I'd say a month-long summer where it was like 100 plus degrees. Yeah. Now we're already in fall, so the weather is outrageously beautiful compared to the rest of the country.
Yeah.
And we're like mosquitoes on a lamp. We kind of gravitate to the nice heat, cool, not so hot summers in Fresno, but not cold winters. We wear our shorts in the wintertime, right? Right? With sandals and shorts, it's 50 degrees and we got our sandal playing basketball, whatever, on the front yard or throwing the football in December.
Right.
So we're a highly desirable state to live in.
Right.
And now that, people are going from Iowa or Nevada or Manhattan or Florida, or not Florida, but all these other states, and they're like, I'm going to move to California, Mom and Dad. I'm going to San Francisco. No, you're not.
No, you're not.
You're going to Fresno.
Yeah.
I'm going to Sacramento. Not anymore.
Right. Yeah.
You're going to Fresno. It's cheap there.
That's it. Central Valley is the most affordable place.
It's the more affordable place. And so when you have all these factors, you're going to see desirability. You're going to see homes. Homes values go up. Get a house now. Hook up with the professional. That's the number one thing. You have to do is hook up with the professional. Professional. I don't represent myself if I have to go to court, I never represent myself. I can.
Yeah.
I can represent myself.
Yeah.
In a court of law. If I get some kind of, charge against me, but why would I do that?
Yeah.
I go to get an attorney, even though they're expensive, and they say, you know all this lingo. I don't know anything about this. I'm paying you to do the job. You do it every day. I don't do this every day. So get with that professional person. To help you. Don't you think so? I mean,
absolutely.
Definitely.
Absolutely.
And guys, make sure you guys ask your questions out there too. We are live on Facebook, so ask your questions. We like to hear other sides' opinions as well. If somebody out there feels like it's going to be a crash soon, we want to hear all that. And
let's talk about that crash too, because I've been through a crash. So
okay, I'll play devil's advocate, and I'm gonna just throw out.
I'm gonna ask. Okay,
I want you to debate. Just give objections on what I'm saying.
So I'm gonna ask you a question first.
Okay, go ahead.
So, Rich, what do you think causes a real estate crash?
Real estate crash. Well, I know for sure when we saw in 2008, we saw a huge supply of houses on the market available, a lot more than buyers, a lot more than buyers that are shopping for houses is one. Bad loan structure, variable rates, right? When you get when your rate, changes in a couple of years, and now you're looking at a a higher interest rate. But on top of that, it has to be a lot of inventory available in the market. It has to be a lot of houses available, only a few buyers that are looking will cause prices to start declining.
But my question was
Okay.
So my question is that what causes a real estate crash? And so I thought your answer was going to be people stop making their mortgage payments.
Inability
yes or no?
to repay.
That's the main reason.
Sure.
Right.
Because when you stop making, people can't afford to make their mortgage payments. So what happens after that?
Hey, pre-foreclosure.
They can't make their mortgage payments. The bank goes, I want the house back.
There's another part of that though, right? So you cannot make your mortgage payment. There's people probably today that can't make their mortgage payment, but they can put their house on the market and they'll still get top dollar because there's not a lot of houses. But in an environment where there's a ton of inventory, now you can't make your payment. You put your house in the market. Now it's like, oh man, we're not getting our offer. Now we got to do a short sale, right? So I think it is definitely a combination of. It's not just one thing. Right?
Okay, so it's multiple. How many people do you think have equity in their homes that bought 3, 4 years, 5 years ago?
Jeez.
Oh well, there's a statistic out right now, and I'm trying. No, real
100% of them.
No. There's like I want to say 90% of homeowners have less than like a 5% rate right now. Literally nationwide.
Yeah. Okay. So that's
a huge number.
So they're
like
going,
36% of homeowners across the nation are free and clear.
Right. That's right. You're right.
No mortgage.
Okay. No mortgage.
So it's a lot of people under 5%.
So you're saying that most homeowners that have a mortgage will probably be able to afford their payments because their interest rate is relatively low, right? Unless we see like a economic overall crash in the economy, they lose their jobs or whatever. Well, they should be able to make their mortgage payments.
Well, yeah, anyone that's hurting right now with this low rate, I mean, if they get really into a pickle and they're looking at foreclosure, they can just put their house on the market, sell it for top dollars, make a great amount of equity, use that to go buy a condo, go rent. You got money, you sold your house, you're good.
Right. So what I'm saying is that the foreclosure rate. So my question is, how many people, do you think, will get foreclosed on? I mean, I don't see a crash happening because of that. Because worst case scenario, I'm not going to refinance because I have a 3.5% interest rate. I should be able to afford my payment, but I lost my job at UPS. Right. I can't make the payment anymore. My girlfriend left me. So I'm just going to let it foreclose and lose all that equity. No, I'm going to put it on the market, make $150,000, sell. So I'm not going to foreclose. Right. So that crash, in my opinion, is not going to happen.
It's not coming.
And on top of that, that sale in that scenario, the sell is like how many years down the line? Because right now we know banks. They're not really looking to foreclose and take the property back, right? Yeah. They are working more than ever with homeowners. If you're in a situation, a lot of mortgage companies are really helping out homeowners, like giving them, putting it in the back end, or working out some type of structure so they can stay in their home. Last resort is a sale, and I've known people to stay in their home in pre-foreclosure up to 2+ years, and not paying anything, but the bank hasn't done anything, right? Yeah. And even today, as we've seen through COVID and with the forbearance that was in place, to where mortgage companies didn't foreclose. So I see them. It's going to take a lot.
So my buying strategy of I'm going to wait for the market to crash, is that a good one right now?
Here's another strategy. Here's another thing.
That's an awful strategy.
Here's something else I've heard. So I've tried to think about all the ways that could make it a crash. The latest one I've heard is the Airbnb situation going on, right? There's some states that are even banning Airbnbs.
New York.
You could have only so many. So they got some doomers out there that say, oh man, it's going to be a ton of houses coming on the market because Airbnbs, they're getting rid of their Airbnbs, which is
a small percentage of.
Well, I mean, this is just what they're saying, right? So I'm just trying to think of all the things that they're saying that could cause a crash, right, or excessive inventory. Even 100,000 Airbnbs coming to the market tomorrow, which will not happen, but if it did, that's still not going to put us at. That's still a drop in the bucket as far as inventory compared to where we were back in 06, 07,
Yeah, and I
08,
think
right? We had
yeah.
1.2 over 2 million homes on the market, like at the height, like in 2010. It was crazy. Today we're less than a million. We're like, I don't know how many on the market, around
Yeah.
600,000-700,000.
Yeah,
I mean,
and I think I think if you bought an Airbnb during the height of COVID, that was the COVID thing. The investor COVID thing was buy an Airbnb, because everybody can't, everybody's leaving their house, type of thing. But that's all. COVID's gone, long and gone, right? So somewhat, and so I think the people that are probably feeling that are the ones that are in the lower touristic markets. Like if I bought an Airbnb in Newport Beach or Pismo or somewhere where everybody's going there all the time, no matter what, till the end of the world, you're fine.
Still 90% vacant.
But if I bought an Airbnb in like, I'm not trying to knock Parlier, California.
Hey man, nothing wrong with Parlier. Shout out to Parlier, California, man.
But I'm just saying, okay. I mean, how many people are realistically going to those kind of? Right. It's all about the numbers. I mean, the smart business person goes, I'm buying an Airbnb. I want to know the tourist information, the numbers of good people going there, regardless year in, year out.
Yeah, right.
It's not going to be Parlier.
Right.
But because of frenzy, it was like a buying frenzy. I'm buying an
It was the
Airbnb.
thing to
Everybody
do.
want to Parlier. Now COVID's over. No one's going to Parlier.
Yeah.
You might be in trouble.
Well, again,
But you
even
buy-
those people, those situations, who like those small towns, a lot of those people who had Airbnbs, they're just like, you know what, we're just gonna make it a long-term rental.
Yeah.
Now they're just gonna put a tenant in there and let them stay, and boom, you're done. It's gonna be a small section of people that are gonna want to put it on the market.
Yeah, be
right?
creative.
Yeah.
There's also I think there's that mobile nurses type of thing where
furniture
nurses
finder.
are coming
There's so
and
many
renting
options.
for a
There's
little
options.
bit.
There's
I'm
options.
sure there's a clinic
Them
and
traveling
parlor
nurses are
somewhere.
crazy, yeah.
I mean, so you got to be creative. But so it goes back to us talking about, the buyer coming to us and saying, "I'll wait for the real estate market to crash." I don't see that happening. You're on the sidelines. You're going to be put on the sidelines with everybody else, and when the rates go down, you're going to get off the sidelines and go into the market with twice as many buyers that we have right now.
And we just saw that, guys. Like,
Bloodbath.
people forgot 2020, 2021, early 2022.
Yeah.
People forgot that whole market, how crazy it was. Like, when rates were low, everybody, their mama, their grandmama, their grandmama's grandma, like, everybody was trying to buy a house. 20 offers. Prices are going up 50, 60K higher than it was. You're coming. It was just you couldn't compete. It was just crazy.
You know what they were doing?
Just ridiculous.
They're paying the same premium that people are paying now for a higher interest rate, except they were paying more, and it was cash out of hand, already gone.
It's psychology, bro.
It was already gone, right?
It's the psychology of it,
20,
right?
30 grand out of pocket because the home didn't appraise for it, but that was the only way to win it.
But they're
So
coming
you're
out of pocket.
paying, they're coming out of pocket 20, 30 grand.
Extra.
And if you take a higher interest rate in this market, you're paying 9 grand over the next 5 years. I don't understand. Make it make sense, dude. And people are still on the sidelines.
It's
It doesn't
never
make
been
any
broken
sense.
down like this.
Well,
and then people.
I do it for everybody, but
it's like this.
I'm only one person, so you can only.
But the psychology, I mean, of us, just humans in general, things sometimes got to be broken down that way, right?
Mm-hmm.
2, we saw what happened last year, right? Same explanation of when from June to August or September, rates went from like 4 to like 7. Like September, we were something. It was
like a 4 or 5 month period.
Right. It was really quick. Rates went up. Right. We saw what happened last September. The market stopped, froze. It was just slow. Prices started coming down a little bit. Right. Here we are today, a year later. We're higher than we were last year, I want to say, at this time in rates.
Yeah, a little bit.
The market is still on fire under the median. So that's another thing.
Right.
Under the median.
And
I would even say under.
And price
Under
right-
400K
price
right now?
Price right at fair market.
Right.
Yeah.
Under 400K, especially under 300K, it's on fire. But under 400K, it's pretty hot. It's pretty warm, right? You're going to be up against at least one person, right?
Exactly.
A decent house, depending on the house, right? But that's the thing. But so the psychology last year, it was a shock factor. So it was like, oh my gosh, the rates are, man, we went from like 5 or 4 to 7. Now we're at 7. So people didn't know how to react. And I get it, right? It was like, oh man, I'm just going to not do anything because we don't know what's happening. We've been like this a year. People are like, 7 is high, but now 6 looks pretty good, which is crazy because a year ago 6 was high, or
they're
like
shopping you.
last summer.
They're shopping.
Last spring 6 was like 6. Oof, I'm not getting on this, but now 6 is looking. It's
Good.
It's just right. It's weird how right.
If you say 6 to anybody right
6 now, no.
they're staying with you. They're
They're
not
all
going
over
to talk to any other loan officer.
Right.
6, I'm getting a 6
6
from this
is-
guy. I'm done. I'm good.
Yeah, but over about a year and a half ago, 6 was out of out of the question. So
They were shopping you if you told them 6 a year ago. There.
So it's just what people. I think what we get used to, what we get accustomed to, kind of seeing something. I think it was too volatile. The less volatility in the market, the easier it is.
Oh, that's
better.
anything.
when
more
we're
confident.
seeing, and you're right.
That's
the
just in general.
I mean, we're seeing that. I like that term you said. You're volatile. We didn't. The Federal Reserve came out. We're going to start raising their interest rates, and so people were like, "Oh, let's see what happens." But now we've seen. Towards the end of this year, we've seen the Federal Reserve kind of cool down and say, we're cool now. We're not going to be doing anything drastic.
Yeah.
So now consumers or people are
Yeah.
saying, okay, we see nothing's crazy going to be happening. Most likely, we're going to jump back into the market and get things going. But like I said, buying a home is always a good option if you can afford it. I mean, not everybody's meant to buy a home, and that's something that I think. We need to be aware of. I like to do the son, daughter, mother test. If my mom came to me or my son or daughter came to me and said, "Dad, mom, or son, should I want to buy a house? What do you think?" What would I tell them? Because if I'm going to put this if I'm going to give them a loan and put them into a home, my own mother or son or daughter, then I should be doing that for the rest of my customers, right?
Right.
Yeah.
And I would tell my mom, you know what, Mom, it just depends on a lot of stuff. I mean, are you going to be buying and then moving out in 2 years? Then you shouldn't buy.
Right.
Because you're going to lose money. Realtor
Right.
fees, closing costs, this and that. No. But if my daughter came and says, you know what, I just got married, we want the house next to you came up for sale. We want to live with you guys forever. I would say yes. I'm like, you know what? Yeah, don't worry about the rate. Get into the house. The home values are going to go up most likely. So get into the house. You see the difference there? Okay. And so everybody's different. You have to see what the situation of the person is.
Right.
And so, honey, why do you want to buy? Well, because, we just got married. We're living in an apartment. We're paying $2,200 a month. I mean, for an extra $800, which we can afford, we can get a home next to you. You see that? And so I'm like, okay, well then that makes sense to me. For you guys can afford the extra $800. You're paying $2,200. Yeah, I mean, we plan on having kids. We want mom to babysit the kids. We want all this stuff. Well, let's get you to my loan officer. And get you pre-qualified, and I'll be your agent. So is it a good time to buy or sell? Yes and no. It depends on what your situation. It depends on every situation. Every situation. So people are, like we were talking earlier, people are constantly buying, constantly selling. The holidays are coming up. Next month is October. Okay, Halloween, Thanksgiving, Christmas, New Year's, and a bunch of other holidays in between, I'm sure, that people make up, right? People are constantly buying or selling. Investors are buying all the time during high. Okay?
And they seem to be doing, the ones I work with, though, they're doing well.
Yeah, well, you got to remember too that. So
that tells you something right there.
So investors made a ton of money during COVID. Okay.
Yeah.
And so they sold a lot of properties. And so they have a lot of liquid money in their accounts. And investors hate putting money in their bank. They're like, it's just sitting there making 0% interest, or I get 0.5, whatever. I need to make money for me. So we have a lot of investors, especially in the Bay Area and LA, in the bigger cities, coming to smaller towns. I have like $1 million in my bank account sitting. I need to move this money. So we see investors doing cash offers in today's market, right? And they're going full price or more, right? We're like, no. I think a house came on the market in Fresno for like $150 and like Exeter or something like that, and it's down to like $200,000 cash. One of my agents put in, $200 cash because there's 2 houses on one lot. The rents are $2,500 total. $2,000, so it's like
it makes sense.
It's like, you know what? I got the money. Where am I going to make $2,500 a month? For my $200,000, not in the bank, not in Wells Fargo.
Right.
I mean, that's all day long.
And the cherry on top is the 15-20 year appreciation over time. Boom.
So
you're not banking on it, but hey, that's the plus.
Yeah, just
at
the
least you
return
get-
alone
at
is-
least
is-
you
So
get-
return, you're good, but
yeah,
like
a couple of years.
appreciation, you're gonna win.
So is the real estate market going to crash again? I don't think so. I mean, you have to be strategic with that.
And here's the thing. For those that are just looking for their home, forever home, or even, 10, 15-year home to live in, who cares what the market is doing after 2 years after you buy, 3 years after? Who cares, right? Like,
Yeah, exactly.
even
Who
for the
cares?
worst, if it did somehow crash after you bought your house,
As long as you're making,
doesn't matter,
Yeah.
because you still, your rent, your mortgage is not changing, right?
Right.
You got to pay to live somewhere. It only matters when it's time to sell. When you're looking to sell your property, now it's time to really focus on what's going on with the market. Is it a good time to sell or not? But if you're planning on living there long term, it doesn't matter. You're paying one payment every month. You're enjoying your beautiful home, and you're happy to go. You're good to go. And over time, as we know, give it time, 8-10 years down the road, it will recover. You know,
Yeah.
even if it does dip, it's still gonna recover over time. So I don't know.
Yeah, I mean, I've seen, like, when the market crashed in 2006, we seen home values get cut in half. Like, I had several rentals I should have kept. Okay, I mean, all investors say that I should have kept this house, that house, but there was a rental I had in next to Fresno City College. It was for $125,000. Okay, I had a mortgage on it for $125,000, and I was renting it out for like $800 or something like that. And when the market crashed,
Oh wait, mortgage for 120? What?
yeah, 120. No, there was $125,000. And the payment was like $800.
Okay, gotcha.
$800. I can't remember. It was,
So he said the mortgage payment
anyways,
was 125. I'm like,
when
whoa.
the market did crash, that home sold for $60,000. Okay, and so I'm like, well, and my thought was that house will never appreciate back to 125.
Yeah, a lot of people felt that way. A lot of people felt that way back then. They
But I
like,
just kept on renting it and holding on today. I mean, it's
and
probably,
what's it worth now?
I don't know, like
It-
300 and something.
Right?
Yeah.
So, yeah.
Yeah, 300 and something.
I think there's a lot of, and here's the thing too, guys. A lot of people who are preaching, you know, oh, it's going to crash, don't buy this and that. I think a lot of people have trauma still from the 08, 07.
do,
You know,
yeah.
it's a lot of traumatized people that went through that time and lost everything, right? And so now they're pushing that on other people, like, oh man, don't buy, don't do this, because they have thoughts, just like, you know, going to war or whatever and having those flashbacks.
Yeah, and,
like
and
they're
one of the,
flashing back.
so one of the big questions that people my age, when they walk into my office, they walk in to get a loan, they're like, Sid, my first question is this a fixed rate loan?
Right.
Yeah, I get that a lot.
Is it
yeah.
a pick a pay loan?
Right.
You guys don't even know what that
And
is.
that's how you know they haven't probably bought since back in
What's
06,
a pick a-
07.
what-
Right.
Nobody knows what a
We
pick a
don't-
pay
we don't
loan
do
is.
those
Yeah,
anymore.
you guys don't, and so we don't do them. And I said we don't do any adjustable loans here.
Right.
Yeah,
They're
I'm-
fixed for 30 years, and so they go, okay, that's my number. So their kids, they saw their parents lose the property. The millennials,
Right.
Okay,
That's me. I saw we lost ours.
okay. So
Went
they
to the rental, lost
so
the rental.
they put their home buying on the fence.
Yes.
They went to the sidelines and go, I'm not ever buying a house, or maybe
Right.
I'm going to be real careful. But once they saw one friend buy a house, and then a year or two later they go, I got $50K in equity, and they're like, shit. I'm sorry. Shoot, can I say that?
Yeah, you can say
Hey
it.
man,
Yeah.
we're not. Hey, we're on Facebook, man. That's it. Unless some kids are listening. And
Shoot. Okay.
You're good.
Shoot, I need to get in the game. And so now you saw all these millennials start getting off the fence after they saw their friends
Yeah.
gaining a little equity, and they're like, bro, you still renting? I'm still renting. Come over to my house where I'm BBQing in my backyard in my pool. You
Yeah.
got a pool? I got a pool.
Yeah.
Well then, hey, how'd you get this house? Who's your loan officer? How much is down payment?
Yep.
And so we saw all those millennials jump into the market during COVID, and even today we're seeing them get into the market.
Right.
So you're seeing that whole scenario play out, and I'm glad that they're homeowners now.
Mm-hmm.
Me too, because we got a bad rap when we were coming up. Everybody talked so much about millennials, not going to college, not wanting to get jobs, all of this and that, when really, I think more of them are entrepreneurs more than anything. Because they saw that what was traditionally
That's it.
being told to do
Yeah.
was not working.
It was a wake.
was
It
not
was a
working.
wake up call.
But
it was,
in the
right.
beginning, it was viewed as lazy, and now it's not. Now now that they jumped off, but we were traumatized. I'm gonna be honest with you, because I saw it, and that was one of the things. I wish I knew more. I wish I knew more back when I was, whenever that was, 16 years old or 17. I wish I knew more about the financial industry and seen what they were putting my parents into.
Right.
When we left it, my parents were like, "Nah, fuck that. Take the ceiling fans. Take this. Take that."
Yeah, just right.
Dude, we went to a rental after that, and 2 months into that rental, we signed a 12-month lease. 2 months into that rental, somebody came and knocked on and put this on our door, and then my dad opened the door and was like, "Hey, what are you doing?" No payments have been made. The bank is taking back this property.
Wow.
I've been paying the landlord.
Doesn't matter.
The landlord hasn't been paying, sir. We're
Yeah.
very sorry. So we even lost the rental after we lost the house. And I was like, what the hell is going on? So, yeah, we were traumatized. And then when I came into the business, my parents were like, mijo, don't do that.
Right?
Mijo, just stay with your steady job.
Yeah.
But it was that age group who saw all of that.
That's it.
Now we're like,
It's
I
a
can't
trauma.
because I'm screwed if I stay. I could be screwed if I leave, but I know I'm screwed here. So I might as well just give it a shot. And that's where it all came. And then when, like you said, everyone started seeing everyone jump in during COVID and was like, wait, I can do it too? Okay, I'm going to do it too then.
Right.
I'm going to buy a house too then. And then now there's a lot of people my age that are like 1, 2, 3 properties. And I love it.
Hey,
I
man,
love seeing it,
I'm about
man.
a year older than you. That's it. So I'm right there too, man.
I love seeing it, man. I just remember always hearing all the slack, and I'm just like, dude, I've never felt so like triggered. Like, but like, what did I do by being born in that age group? You know,
No, this is what happened. Though.
But it's not anymore. Nobody talks like that anymore.
The world, the world kind of changed. To be honest, it was a huge transition with the internet and everything happening. So it's never, this is all new, right? So not understanding how people can make money online, like just different ways of generating income and side hustles, and and millennials will have taken a lot of advantage of that and finding different ways because they saw their parents like struggle for 30, 40 years at a job and work, they say, oh, just work hard. Okay, well, shoot, you're working 100 hours a week and we're still barely making it. So the millennials just like, hey, this is
looking
not
for a better way.
It's just a different route.
This is not the
That's all it
route.
was.
There's got to be a better way.
There's got to be a better way. And then you through the internet and
Yes.
everything that has
Social
to offer.
media.
Social media. It's just a different world.
You remember that though? Like all of that?
Yeah,
They don't get out. Oh, they're attached to the screens.
Yeah.
They just stay in and
Because
play video
the world
games.
was transitioning.
And now there's video gamers who make more money than I do.
Yeah, we just, like I said,
Daily. It's crazy.
Yeah. I mean, there's a lot of people
crazy.
online, kids on YouTube making
It's wild, bro.
six figures a month.
wild.
You know what I mean? Like, just
And I like it. I like the innovation. I like to see
it's
it.
innovation.
Yeah, what's the and then now we got Chat GPT, AI,
Yeah.
and so that's another whole another ball game, not just for the real estate industry, but I think for just society in general.
Right.
That's changing. A lot of changes happening, and so I mean, I think it's a really good time to kind of like look at getting to a qualified real estate or loan officer, like that term, like real estate. I'm your realtor for life. You guys heard that term, right? Mm-hmm. And so it's like, hey, you know what? Come to me. I'll take care of your business for the rest of your life.
Let's unpack that real quick. So let me ask you this. Realtor for life is a great place to be, family, but is that always the case? Because think about it this way. You can give someone great business 5 years down the road. We've all seen it. You look up or you call them, how you doing? How you been? Oh, good, yeah. And then you find out they just bought a house or just sold their house and they didn't call you or use you. Is there any things that you think that could to make that, I don't know, any
well, I mean,
how do you
well, yeah,
go
I
about
mean,
that?
you're not going to keep every client,
Right.
obviously. I mean, I'm a realtor for life. I mean, I have the same tax accountant for the last 20 years,
Right.
until he does something I don't like.
Right.
But he
Right.
hasn't, and he contacts me every month. He sends me emails every month about, make sure you do this, make sure you do that.
So why do you think some people go with a different realtor, even though they've used the realtor that they beat? How many times have you heard from a seller or a buyer like, oh yeah, the last realtor we bought 2, 3, 7 years ago, they were great. Now they're doing business with you or someone else. So why aren't they calling that same agent back?
I mean, just like I went down to the Chevy dealership to buy my Corvette, and then now I'm using different salesmen. I'm just because my wife didn't like them. I mean, it could be 1,000 things.
Sure.
Yeah.
But I'm on the other end as the actual salesperson. I need to do everything I can to maximize my repeat business, my database. So I think we were talking about
some tips out there you can give to some agents that are listening?
I think you need to make sure that you're in contact some way with the people you've done business in the past. Somehow it can be as simple as like, I'm old school. Like I've been a realtor for 1 year and I closed 12 deals. I've been a loan officer for 1 year and I closed 12 deals. Okay, so how are you going to turn those 12 deals into 24 deals the next year? Mm-hmm. I don't know, Sid. Tell me. That's what you're on this podcast for. Well, keep in contact them somehow. Why don't you call them once a month and say, hey, I'm just giving you an update on your home price. I've been watching it. Your home is now worth. I sold it to you for 200. It's worth 225, or it's gone down to 175. Buy. Okay. The next month you do the same thing. It's all about keeping, or text them or email them.
Yep.
Phone call is always the OG way of doing things. We talked about that earlier. Like, you know what? It's so powerful when you hear somebody's voice. I think that realistically, I think the world is turning to more texting, because I call people and they don't pick up. Even though they see my number, they're too busy. Oh, you know, man, I'm doing this and that. But when they text you, 90% of the time they're going to read the text, right? Text, read it. They might not respond, but they read it. Oh, it's just Sid, you know, right? So keeping, you know, having a CRM, having a database, a sheet of paper with
super important,
scribble on it, or advanced, you know, software system on your computer. It doesn't matter. The best CRM that works is the one that works. The best CRM.
There you go.
Tom Ferry, right?
Yeah,
talks about that.
yeah.
And so that's what
I've
I
never
would
heard
say.
that before.
Yeah,
Yeah, the best.
CRM.
It's true.
yeah,
Like,
and so
whatever you're gonna use.
because in our trainings, you know, we talk to people like this realtor came up and she goes, I closed 200 deals this year, and then somebody goes, how much is your CRM cost? You know, is it like $500 a month? And like, no, it's my Excel sheet. My assistant
Basic.
keeps tracks of it, and I tell her, send Christmas cards to everybody, and that's it. You know, that's their CRM. And so to answer your question, that would be what I would say. And it could be in any profession. When you go to a restaurant, they might have you punch in something on, what's your number? What do you think they're doing with your number? You know, they're texting you, hey, we're having a special.
Yep.
Well, everybody's doing that. I went to my
Yep.
chiropractor, and like, what do you want my You want my email, my number? I just want you to crack my back.
Yeah.
You know what I mean? I don't want all this stuff,
Yeah.
you know?
I don't want a second date. No.
Yeah, exactly. And so they're like, we want a second date.
Yeah.
Right?
100%.
And so then they do. They're like, hey, 2-for-1 back cracking.
Yeah.
Right. Like, really?
Yeah.
But can I bring my wife? Yeah,
Just
she
stay in
free back. I
data.
crack your back, and I crack. She gets her for free. I'm like, go for it.
Yeah.
So why aren't you, as a real estate professional, doing that? Because you're not being trained by that. You're not taking your business serious. When you wake up in the morning, a real estate loan officer, why aren't, you know, this is business 101, and going back to the millennials getting into the entrepreneurial world, they're learning all this. They're like, you know what? I want to be an entrepreneur. I want to be a business person. The world of entrepreneurship it can be an ugly business because you're in competition with people. Okay, and it's always the person that wins in the entrepreneur game is going to be the person that has great planning and has the drive. Okay, because because if you have the best planning and you never use it, you have the best software and it never gets opened up.
Right.
Okay, and you have the best willpower or the best drive or the best why, you'll go a long way. But when you kick in that training, that software, that planning, it excels you to the next level, you know, of business. And so that's why, you know, and that's only part of it. I think most people that are entrepreneurs, they don't have mentors. Okay, they don't have people pushing them. I think, you know, by nature, most people just need someone to push them. Okay, they need the discipline, they need the obedience to do the daily boring things every day.
Accountability.
Yeah, accountability.
Yeah.
Yeah. You know, like you told me, Sid, and I called you up. I said, hey, I want to go on your podcast again. I have to promote my real estate crash course. And you said 2:00, be there. Right? I said, okay, I know where to be at. Right?
Right. Yeah.
And so if I don't show up, I'm in trouble. I'm in trouble.
Sure.
I got to be accountable by Rich, because then he's my bud, and I don't want to let him down. So we have to have some kind of accountability by someone. It's very rare that you get someone that really just wants to be, that can drive themselves.
Sure.
You know, to drive themselves, or you have to have someone to look forward to. You have to have a goal. Like okay, so here we are. Finishing up September, right? So we have October, November, December, Q4. So what are your goals from now until Q4? If you have none, then you have very little drive, right? I don't know how many deals do you have to plan on putting in escrow? 3 a month, okay? 3, 6, 9. Okay, so you're telling me you're going to put 9 deals in that, which is not a lot, okay? I mean, for some people it might be a lot. For other people, It might not. It might not be a lot. Maybe not. Okay, like 9 deals in escrow. Okay, so put it on the board, right there. You mean you want to put it on the board for everybody at the office to see?
Man. Yep.
That's what we do.
Yeah.
We put it on the board. We have a
How much more accountable?
We have
Everybody
a-
walking
right?
by every
Everybody
morning is
knows.
like,
We have
he
a-
ain't hitting it.
Yeah.
We ain't gonna do
At
it.
my office, we have a weekly running board. Everybody in the office knows how much everybody's closing. So you can't lie like, I closed 20 deals this month. Well, Sid's board says that you didn't. Right? And I'm the one cutting the checks.
Right.
So I'm like, cut a check. Okay. Mark 1, Rich 2, it goes on the board.
Yeah.
And so you're saying that shit.
It's transparency, is accountability, is
That,
all
that guy's closed. That guy's closed this quarter. That closed 10 deals. Okay, this quarter, 3, 6, 9. Okay, 3 a month.
Yeah.
Okay, a top producer in Fresno. Just so you know, like, am I a top producer? Yes or no? Top producer closes 20 to 25 deals a year. The NAR, National Association of Realtors, says if you close 25 deals a year, you're considered a top producer in the nation.
Right.
Okay.
Really?
The average
I did
agent
not know
closes
that.
5 to 7 a year. The average agent.
Yes.
Right?
Yeah. The average agent's close. Okay,
5
so
to 7.
Wow.
So it's
So-
it's a lot more failure than success.
So now I have some bad news for you.
lot of
It's
failure.
not counting a peak in the market like we had.
Yeah.
Oh, I was
Man.
closing 25 refis a month. That was on a
What are the loan officer
Yeah.
averages?
I don't know. It's
I don't
probably a
know
little
about
higher.
Yeah, it's got to be
It's
high.
gotta be
But
high.
because
Yeah.
you guys could do
Wow,
refis.
that's crazy.
per-
Okay.
No, the bar's low. But Fresno, we've always, and I haven't had a lot of experience with other markets, but just felt like Fresno is very competitive and has a really active real estate market.
Yeah.
It's very active here.
Yeah, and
Investments,
and in the
whatever.
bigger city, it's much more active. Okay, Fresno is not cutthroat. I mean, if you've done real estate in Sacramento, LA, Bay Area, it's cutthroat. And
Yeah,
realtors
I've
are
heard.
mean.
Yeah.
It's cutthroat business. Okay, so we're a nice city compared, as far as real estate agents
But
concerned.
also Frisco, the average deal you're doing like 900, 8,000.
well, that's why people are
It's
like
like 20K up
Yeah,
at
it's
risk,
pretty
per
cutthroat.
deal.
Yeah,
on
more
average,
than 20K,
on
yeah.
average.
Yeah, on average.
right?
Yeah,
so it's a lot
exactly.
more. They're like, hey, they're doing everything.
Oh yeah,
Cutthroat.
yeah,
Yeah,
and
yeah.
so we put those numbers on the board. So real estate agents, everybody in the office, and we put the loan officers' number on the board. Like, we know so and so closed so many deals. Everybody gets bonuses if they close X amount of deals per quarter, just to incentivize them to. Because you got new agents coming in, new loan officers coming in, saying, "Dang, you're killing it." But think about it. I mean, if you close 25 deals a year in Fresno, as a real estate agent, your average sales price, is 400 or whatever. You're probably clocking, after broker split, you're probably clocking maybe 5-6 grand, right? Okay, so 5-6 grand times 25 is what? Let's say five. What's 5 times 25?
125.
125 minus your taxes and expenses, maybe let's just say 80 grand.
80.
So you're walking
89.
home with in pocket 80 grand. That's not too bad and plus you have the freedom, like we were talking about, of your lifestyle.
Right.
So for 80 grand, and that's a top producer. You can really, that's not a lot of deals to close. Okay.
Yeah. Wow, I did not know that.
And which leads us, actually, you got something.
Oh yeah, I do. I do have some. So
yeah,
I am a real estate broker. If you guys know anybody that wants to become a real estate agent, we've been doing the real estate crash course for 20 years now. I can't believe it, right?
Wow.
I've known
Wow,
Rich for
congratulations.
I've known Rich for what, 12 years, 15 years maybe?
What?
12 more?
No, man. Man, I've been full. This is my 6th year
In real estate?
full time.
Oh,
Yes,
dang, it
I
feels
started
like I've
27
known you forever.
So
Rich.
yeah, but we met
I don't
maybe
even remember.
2018,
Tom Ferry in
2017,
LA
18.
maybe?
Probably 2017.
Like,
right?
who are you? Fresno? You from Fresno? Yeah, I think we met somewhere around there.
Yeah, we did. Yeah, I think we did.
Yeah, you know Joe Parks, I think, right?
Yeah, I know. Well, I've met him before. I don't know him like that, but I've met him. I'm trying to think. Did we meet at Tom Ferry?
We did meet at Tom Ferry in LA.
But I felt like we knew each other before that. No,
We might have did, I think. Yeah.
I don't know.
We might have did.
it might have been 2017ish. Yeah, but yeah, this
Anyway,
is my
so
6th.
getting back to the crash course, yeah. So if we have a crash course starting September 19th. If you know anybody interested in getting their real estate license, September 19th, it costs $500. There's a live broker, Mr. Noe Cruz. He's an ex-principal. And now he's a real estate broker, and he teaches the crash course. He'll guide you through everything. Get your real estate license. Once you get on board, you can go with any. You can be part of our crew, or you can be with your own crew, some other crew anywhere in California. We do offer all our students a position. We interview and offer a position to see if they're a right fit with us. And you can start your real estate career. Okay.
Nice.
Yeah. And so that's a good opportunity for you to get into the business. Okay. Real estate is always good if you hustle. Okay. It's not a non-hustle business. I mean, I've gone through probably thousands of real estate agents and loan officers. Even back when in 2002, when you didn't need a loan officer license at all, you could just do a 2-day class and you had a loan officer license. Yeah.
Wow.
Yeah. It was.
How long is your course again?
Okay. It's 6 weeks.
6 weeks.
Yeah,
Got it. Once a week, or
once a week for 6 weeks, and that gets you through the 3 books of real estate principle, practice, and legal aspects, and then you study for your state exam. You pass your state exam.
Hey, that's
you're good to
good.
go. You can sell real estate anywhere in California, as you guys know.
Yeah.
You can work out of your home. We get people, all different kinds of people. We get new young people coming out of college. We get people that are retired from the state of California. We have a bus driver that just retired. The retirement's not enough money. Their income. They don't want their retirement to run out if they have a certain kind of retirement plan. If they live long enough, which most people are, their retirement's going to run out, or they just don't want to touch it. They're like, you know what, I'm not touching that money.
Yeah.
I'm only 50 something. A lot of people in their 50s, early 60s are retiring. They're still too young. I'm like, I'm too young. I don't want to sit around the house. I mean, I want to hustle, do something. I mean, I don't have to sell 25 houses a year. I can sell 10 houses a year,
Right.
and go travel Europe,
Yeah, you have a lot of extra money.
Right. You make an extra 10, 15 grand. I mean, I'm going to go travel.
Right.
Go do something.
Yeah.
Give this money to my grandkids, or,
Right.
they're going to college. I want
Yep.
to surprise them with a
Yep.
little bit of, money from grandma, grandpa. So, and then we have young kids that are just starting off. A lot of single moms that come in with a couple of kids, and they come in and they at two something, they got to go pick the kids up, and then after that they work out of their house. So they'll come they'll drop the kids off in the morning, work for 4 hours at the office, pick the kids up, work the rest of the day at home, cook dinner. So the nice thing about real estate is very flexible, but I think you have to be with the right company. We talked about the mindset and the culture being very important. I have agents that make $0 a year, and I have agents that right now, even in this market, so-called slow market, they're making over $200,000 a year. Okay, so it really depends on, what your drive is, what your business plan, is, your hustle, your accountability. I always recommend that you get a mentor. Some kind of mentor, whether it's your broker. Sometimes they're too busy, or sometimes it's just not in the business plan. You should pay for a mentor. I always recommend like a Tom Ferry mentor. Those are always good. We're actually going to leadership training next month in Florida. Me and my other broker, we're constantly getting mentored and developing ourselves. Even after 20 years in the business,
Yes.
you still have to be. It's not like I'm a badass. I don't need anything.
Right.
That ego can get in your way. You got to be careful,
Always
because
gotta be
you're like,
learning.
you got to be always be.
Always
You have to
improving.
humble yourself at any phase of your career, because, like I said, the ego can get in the way, and that is a dream killer. You know what I mean?
Yeah.
It's a dream killer, because if you think you know more than everybody else, then you're in danger. It's a dangerous place to be. At least for me it is. I can't speak for anybody else, but my ego is very big, and I have to humble myself down. Like, you know what, I'm a bad at this, and okay, yeah, I know that, but humble yourself down. You have a lot to learn. Even from the new agents that come in, I'm like, hey, you just fresh out of college. What can you teach me? Nothing. My ego says you can't teach me nothing.
Right.
Until they say, well, I just took a course in GPT chat, and I'm like, okay, let the ego go. This kid gonna teach me something, right?
That's a new tech.
I mean, I'll give you an example. When Facebook and Instagram, maybe 5-6 years ago, started to become a player in the real estate world, I was getting all kinds of lessons from all these young kids, including my own kids that are in college now. I'm like, how do you, what's this TikTok thing? they're like, oh, this is what it is, Dad. Or, my new agent would say, you should be on, I was only on Facebook, right? And then I got an Instagram account. My kids made it for me, right? But my real estate agent was like, you should be on Instagram. And I'm like, what is that? So to put that ego aside and humble yourself down to be a constant learner, and learning is super important. And I think I don't plan on retiring anytime soon. I don't feel a need to retire, so I think I'm just going to be constantly learning all the time. And a millennial used to be the in thing. Now they're becoming the old, out with the old, in with the new.
Yeah.
Right?
Oh, yeah.
Right. Now it's like Gen Z now.
I don't know what it is, but
I think Gen Z is
yeah.
Well, man, this has been a fire episode, man. Sheesh, you got any? Man, I appreciate you, Sid, man. Make sure you guys contact Sid, guys, especially if you're considering getting into the business. He has a great crash course for those that want to pursue their real estate license. What's the best way for them to contact you?
Just call me or text me at 559-287-8065. Probably just text me.
One more time, 28?
Yeah, area code 559-287-8065. Just text me, okay? Yeah.
Nice.
Or just look me up on Facebook, Sid Delatorre. I'm there. You'll find me. Yeah. And get a hold of me, and we'll get you guys going.
There you go. Sweet, man.
What's this class size?
It is anywhere from like 6 to maybe 15, depending on the class, depending on the amount of people. So I think it maxes out about 15 people, and it's really, really good. We get people that have tried. Like we had 2 people come in last week, and they tried to do the real estate online, but it just didn't work out. They didn't understand the terminology. It's like, we need someone to sit us down, and we can raise our hand and that kind of thing. And if you're taking your business, if you're really taking your career seriously, get into something like that. $500 is really nothing for what you put into. If you open a restaurant, you're looking at $100,000 to open a restaurant.
Right. A lot of risk.
A lot of risk. And so $500 here, it's going to cost a total of about maybe $2,000, $2,500 to start, to open a door, like to have your key on your phone and open that door is roughly about $2,000 to $2,500, which is really nothing for the amount of money that you can really earn, right? And so doing that, it's one of the cheapest ways to start a business and to actually start making money immediately, because a lot of people walk into getting their license and they have family members waiting to list their property with them. You get into escrow, you close one deal, you close more deals. So I think it's a great business. I've been doing it for 20 years. So it's, to me, it's just not a job. I wake up and I'm like, hey, I wake up in the morning, I'm like, I don't know how my day is going to be. Like, I'm going to give you such a good example really quick here. Yesterday I woke up, okay, and I forgot that one of my real estate agent's husband passed away. And I'm like, is this the day the funeral is? And I'm like, yep. And so yesterday, my schedule was, I didn't have any appointments, and so I'm going to go to the mass, my real estate agent's husband's the funeral, and then I found out that one of my real estate agents was in the hospital. Okay, and so after that I went to the hospital to visit him. Wow! I said, hey, I'm just here checking on you, because it's just it's that's my business. What I do, I have a relationship with agents and loan officers, and so I never know how my day is going to be. Okay, and then after that I went to the office and met with 2 clients, that called me all of a sudden. Hey, are you at the office? Yeah. Oh, can I come by in an hour? Sure, I guess. Yeah. That's how our business is, right? Yeah. And I love it. Yeah. I love it because every day is not the same. It's always and that's how I've lived my business, my life.
That's it. Yeah, it's exciting, man. Every day's exciting, but just the more experience you got, the more you can handle everything. What comes at you. So it's a pleasant thing, man. Man, it's been a hot one, man. It's been a pleasure again, Sid, man. We gotta have you again,
thank you.
Back again, man. You're like family now here, man. Yeah. So just anytime you want to come on and hang out with us, it's all good.
Let me know anytime you guys need somebody to fill in or something like that. I see you guys kind of. I think like heat speakers. One of the things that I enjoy about them is that they have like such a variety of people come on to the show, which is good. So sometimes it's not even real estate related. I think it's just kind of like other. I pick up a lot of other tips. From other people, but also too like other leaders in the industry. I get to see what they're talking about, what their take is, what their opinion is, And so I don't think there's enough of these type of podcasts or shows, and especially
local, huh?
Yeah, especially local, because like I said, I mean, I don't really care much about what's happening in LA or in the Bay Area. I care what's happening in Fresno real estate and loan, because it's a regional type of business. And so I learn a lot, pick up a lot of great tips, and so that's one of the reasons why I enjoy coming on to the show.
Well, we appreciate it, man. Appreciate you being here as well.
Man. Yeah, for sure. We love having it. You got any closing things you want to?
Man, no, just man, I really like what you're doing out there, man. You got a big team of agents, you got a team of loan officers. Man, I just hope you guys continue to do well, man. This market needs knowledgeable people in those capacities. So
for sure,
it's a good course to take, good person to learn from, and I hope you got 15 in that class on Tuesday, man.
Oh, yeah, I'm sure we will. Have a good group of people, and like I said, just aligning yourself with the right type of people. I'm always taking on. So if you join our company, I mean, you're always going to have. My door is always open, and I have another secret guy. His name is Noe Cruz. He's the co-owner and broker there. He's also, like, right now he's hustling, probably meeting with real estate agents about a bunch of things, and then we kind of go back and forth and take turns. I kind of handle the loan department of it, and he handles the real estate side of it. But I'm always available for everybody, and that's important that you have that open door so you can walk in, and you have to have that network, a team. Like, go to the broker. Talk to them about the deals. Talk to them about your plans, because a lot of times you can be stagnant in our business, and you don't want to be stagnant. You always want to be like getting pushed to the next level. And so when we see people that show ambition, like I think on our last show, every year in January we let go of real estate agents from our team. We go and we say, you know what? You're not calling us. We're calling you. You're not coming to our trainings. You're a liability to our company. Bye. Okay. So we do the Navy SEAL thing. We're like, okay, you know what? We don't have the biggest crew in Fresno, but we feel like we have one of the best crew. And the way we know that is we go on the MLS and we look at the numbers, because numbers don't lie. I can say I have the best crew, but when you look at the sales, you see the sales happening there. And so per agent closing, the sales are high. And we've basically been able to really turn people's lives around. People that were working at pizza parlors, that were working as, other professions, that weren't happy, now they're living, and they've invested in real estate too. They're like, you know what, I might as well make some money. I mean, I get all the best deals. I mean, we get all the best deals, right? I mean, they come in our front door, and we can say this one for 100. This one came up for 120. They want a quick sale, they don't want it on the MLS or whatever, and you can jump on it.
Yeah,
okay?
Sure.
And get 100%. Do that or whatever.
First dibs at it,
Yeah, whatever your goal is. I mean, we also have people that don't invest in real estate. Some of our agents have zero real estate, but they've invested their money in something else. It could be something like, I have no real estate, but I put my 2 daughters through college.
Right.
Right.
Yeah.
As a state, my husband works. He's paying the mortgage, and all our money I'm making, they're going to Texas A&M or something like that, and that's their dream. Everybody's dream different. You don't have to have, I mean, of course, real estate is a good investment, but I'm just saying, when becoming a real estate agent, it gives you that opportunity to make quick money. Okay, you got to hustle. I mean, like if I say, like right now, if I said, you know what, I need $30,000 by the end of the year. Think about it. Okay. How am I going to do this? Well, I already know how to do. You better effing wake up and hustle, knock on doors, go open houses. You'll get 4 listings if you do open houses every single weekend until December. You'll get a listing or 2, and you'll get some buyers, and you'll close probably 3, 4, 5 deals by December, and you'll have that $30,000. Yeah. So don't tell me you're not going to make. You don't have the ability.
It can be done.
It's you not wanting to do it.
That's it. The drive.
Okay. Or you just don't have. If you don't want to do it, fine. That's okay. I mean, that's your business, But if you want to do it, I am here for you. I haven't slowed down in 20 years.
I don't see how. I mean, I need whatever you're doing, man, to keep going. You got a lot of energy still.
I try to stay healthy. I'm a vegetarian. When I talked about that.
Yeah. We got to unpack that. We're running out of time, but next we got a lot to cover. We didn't cover. And I feel like next time you come back, I want to go deeper, and just strategies and ways to help out maybe other agents, things we didn't go really deep in.
Yeah.
And to talk about this market and how people can try to get success in this market.
Yeah, so I have a lot of ways to get. I mean, there's a lot of ways to get success, and I think a big part of it is just the mindset. Because think about it. I mean, you said, Sid, I want you to unpack ways. I mean, why don't you just go on YouTube? you know, and say, you know, GPG TAT for realtors. It's on there.
Chat GPT,
Yeah. I mean, it's there, you know, or why don't you go to Tom Ferry? Tom Ferry's having a webinar, I think, next week. Why don't you do that? Okay, so, but you want to hear from me, that's fine. But hang around with the right people. It's super important. Wake up in the morning, hang out with the right people. My mom always said, and this was back when marijuana was, you know, a different mindset, but she said, don't hang, you're going to hang out with the weed smokers, you're going to become a weed smoker. Right?
Very true. Yeah. Who you hang
That's
out
what
with,
she always told me. You know, that was her thing. I said, okay, Mom, I won't hang out with, you know.
Yeah. Very true. It's all about your network, you know, and who you surround yourself with.
Yeah, and so that was her thing. And so I was like, okay, well, but I got the picture. I'm like, hang around with the people that you want to be like.
Yeah.
Right.
You know, so be like the people. If you want to be around people every day that are passionate and hustlers about their business, then and that's, I think, what we have in our office. Once you walk down the door, once you open the door, is game on. You know, even we train our receptionists to a certain mindset. So when we're in the meetings, we're like, when the real estate agents walk in the door, this is your script. Good morning. How's you doing? How's your day going? What can I help you with? And so every single agent, and sometimes I'll be on the couch in the back just kind of watching her, and I'm like, okay, if she's not doing it, we're like in our next meeting, like, you're not doing that. You know, it's important for us to do that. It's kind of like when you walk into, like, you know, Disneyland or something, like, you know, and you're like, hey, you know, everybody's got their little script, and so that, you know, people feed on that, and they're like, shoot, I'm feeling good. You know, and the numbers on the board, somebody just closed another deal. Yeah. They closed 6 loans this month.
Right.
You know, why am I not doing that? Mm-hmm. It kind of puts you to question, like, why am I not closing? Well, I don't know. What, you tell me what? Do you want to close 6 loans a month, or yes or no? No? Okay, well then don't worry about it. Right? You might be in the wrong office.
Right.
Or, yeah, I do want, show me how. Why don't you take that guy out to lunch and pay for his lunch? Mm-hmm. How much is that lunch going to cost you? Well, I mean, lunch is expensive now, $12 a plate, plus he might order 2 drinks. That's another 12 each. That's what's that, $60? Yeah.
And he's ordering lobster steak. He's definitely
he's
getting the best.
producer.
Yeah, he's getting the best of the best meal. So
okay, so you spend $60. So where are you going to get that information for $60?
Man,
right.
It's worth it.
It's way worth it. So I'm just saying. So we can talk more about that next time.
Lot. Yeah, that $60 is a lifelong of knowledge. You know what I mean? So that $60 investment could last you the rest of your.
Take me to lunch.
You know what I mean? I'm cheap. I'm cheap. I'll do it for $59.
And I'm a vegetarian too, so I'm not going to order steak. I'm order like you know, spaghetti with no meatballs.
There you go. Right. There you go, man.
Save some money on
for sure. For sure. All right, man. Well, I guess that's it. Wrap it up for this session, guys. Heat Speakers, man. Thanks for tuning in. You guys catch us every week.
See you guys next
time.
time.
Check out the YouTube. This is the first time we did Facebook Live. If you tuned in, amazing. Leave your questions. We'll keep doing this live stuff too.
Yeah.
I think it's kind of cool.
Definitely. Until next time.
All right. Take care, guys.